Although we're beginning to see them less and less, pensions are still a critical source for retirement planning for lots of people. Making the right decision with your pension can save you and your family thousands of dollars over time. Today, we're talking about some of the things you should be considering and working through as you're evaluating which option would be best to take your pension. First up, lump sums. Now, if your employer offers you the ability to take a lump sum option, we'd like you to consider it. While it may not be the best financial decision, you do at least want to compare it with some of the other annuity options that may be available to you. Reason being is because the lump sums don't force you to take an income stream over time and instead put a lot more flexibility back in your pocket of when to take a distribution from that account. It's important to review the fact that you're not locked into a certain percentage rate that your employer's pension is going to offer you. You instead get to invest those funds as you would in an IRA or a 401k that you have with your employer. Secondly, other payment options. While the default option will be for you to have a payment come to you on a monthly basis based on your life expectancy, there are typically a lot other options available to you. Some of the ones that we often encourage clients to review are what are called joint and survivor options. And this basically means that, if you take a payment based on your life expectancy, you can also base it on your spouse's life expectancy as well. The reason you would want to do this is if you didn't have a joint and survivor payment option, if something catastrophic were to happen to you while you were taking your pension based on your life, that payment could stop and your spouse could be left with no more pension payments coming in. So having this joint and survivor option, maybe a 50% or maybe 100% option, while you would receive a reduced benefit in most cases, the advantage is you make sure that you have that income for you and your spouse all throughout your entire retirement. Next up, when can the payments start? Most pension payments start paying out funds at age 65, what's called a normal retirement date. Now, some plans allow you to defer that date to a certain period. Oftentimes we'll see 67, maybe 68, but that's subject to a number of conditions. Or we even have the option to take it early. Now, if we do take it early, there's typically what's called a reduced benefit. And while that reduced benefit, in the same way with Social Security, if we take our benefits early, we haven't had as much time to allow them to grow and build as much of a cash value as it would otherwise. So they need to pay us out a reduced amount. That said, if we have a shorter life expectancy, this reduced benefit might actually still make sense because we're collecting for a longer period of time. Again, it's important to coordinate this with your payment options because even if you have a lower life expectancy, maybe your spouse doesn't. And that's where a joint and survivor option may come into play and be the best option for you. Now, because of all the possibilities and start dates and payment options with your pension, the variables can be really confusing, and making sure that you make the right decision for you and your family is really important. So we want to encourage you, if you have questions about your pension, you're not sure what makes the most sense for your financial plan, please reach out, let us know, as we'd love to help.